Hi everyone, welcome back to Perception Paradox. My name is Zivile and I'm your host. And today we are back with one more episode focused on the venture capital. So most venture capitalists follow a pretty predictable path: investment banking, consulting, maybe a big tech company, and then a fund. Today's guest is Jakob Storå, founding partner at Superhero Capital Fund that originated in Finland, in Helsinki. And Jakob is a lawyer, academic, founder, investor, and he founded one of Finland's most consistent early stage funds. And it's been over 10 years, 4 funds, and exits that started as 530k euros seed bets and ended in 180 million euros deals. But what I actually wanted to explore today with Jakob isn't a track record. I really wanted to dive into the mind behind it and to understand better three perspectives. So, perspective number one would be the founder perspective and founder mindset and that whole human edge. Then to dive into his investor hat and hear some insights about the current landscape in the startup scene. So I guess let's wait no more and let's dive in. Real people, real stories, and real challenges that break the status quo. I'm your host, Zivile, and welcome to Perception Paradox. Hi, Jakob.
Hi, Zivile. Thanks for having me on the show.
Thanks for joining me today, and I'm really excited to have you here, and I'm really curious for our conversation today. But my first question is, how are you today?
I'm doing well. I'm really looking forward to the show.
Amazing, me too. So I think we're gonna start straight diving deep into the conversation. There is a version of you that spent years in academia, right? Then there is a version of you who actually been building, and then there is a version of you who's been investing. So how wrong were you about what you thought you knew about the business building when you moved from academia to more hands-on experience as a founder and then later on as an investor?
You're right. I mean, there's quite a few angles there. So, I mean, to give you a bit of background, I never planned to be an investor. I went to law school and later did a PhD in accounting. So it all started basically back almost 20 years ago when I was in law school. And together with some friends, we started a non-profit. So, no idea of making money, just a non-profit. We were the club of academic entrepreneurs, and we basically wanted to encourage people who had an academic background to become entrepreneurs. So, we knew almost nothing about that at that stage, but we were, upset with there being so many promising innovations being developed in Finland, and these innovations were being left on the shelves of the universities or research institutions, and we felt, that's kind of, that's a shame, and someone should, start building businesses around them. And we had no experience from that, but that was something that we wanted to encourage people to do. So that's kind of how it started, with no intention of actually making a business.
Okay, and how did that go?
Yeah, I think,
Or when?
it took its turns, quite quickly when we were starting out. We were going around talking to researchers, universities. And at one point, one research institution we met who encouraged us to, hey guys, why don't you set up a company so we could buy services from you? So we gave it a thought and, said, hey, why not? Started from finding someone who said they wanted to buy services from us. So then we set up a company. It was called Admoneo. And then we started to basically helping universities and research institutions to find ways to commercialize innovations. So that was kind of how it started. We were working as consultants and learning a lot about what happens in the university world.
And what's the most challenging thing when it comes to this whole process from science to the business and commercial, right? Sometimes what I keep noticing that, especially in the last few years, when we started focusing so much on deep tech and commercializing that there are quite some parties who are trying to put, let's say, academic scientists in the roles of CEOs or the salespeople. And that from my point of view, it does not always work with all that type of people. What did you notice the biggest challenge while going through that process?
I think you really nailed it there, Zivile. That was what we discovered as well. When we later started Superhero Capital, we did not specifically look for research-based ideas. But to answer your question, actually, that was what we discovered. Researchers quite rarely want to be founders. And if they want to, maybe they are not always, the right people. So you to get started, you need to build a team. You need to find new people and to have, the commercial part as well in the founding team. And I think that was kind of the big challenge, finding a team that would be able to build a product around, whatever the innovation was and take it to market. So I think that's absolutely the main challenge.
So basically having more diversified team or having someone from a commercial side potentially could be a way to solve that challenge.
Yeah. I mean, definitely. That's what we discovered as well. You would meet researchers who had to come up with something super interesting. And I think often they maybe kind of felt, I did my part, now we need to find someone to take it to the next stage. So you didn't have a team, you had a promising innovation that someone needed to package into a product, and go to the customers and all of that thing that you need to do in the very, very early stage of your business. So that was definitely the main challenge.
And so how successful were you with Admonea to reach your goals and to solve those problems? And was it the right timing to start such company or was it a bit too early looking back?
Looking back, I think the timing was right because it was, there was a lot of public funding and effort going into, commercializing innovations. But, at the end of the day, we were acting as consultants and we came to the realization that this won't scale and we wanted to do something that scales. So that's one thing. And another was that when we were meeting these researchers, some of them would ask, where can we get funding? Guys, do you know where can we get funding? And, this is almost 20 years ago. So there was very little venture funding available, and we just said, hey, we don't know. That's a good question. So we kind of discovered that maybe it seems like there would be a good opportunity to actually fund these companies at a very early stage. So that's how the idea of setting up an early stage fund was actually born. Basically, we kind of pivoted from the consultancy to the investment business idea. And not all of my partners in the previous firm wanted to do that. So the team kind of split up and went our separate ways. At the same time, I was working for a large business law firm and finalizing my PhD. So I ended up leaving the law firm to start raising the fund.
So how long did it take you from this idea to raise the fund and to see, okay, so the scientists, they don't get capital. There is definitely a gap to actually launching the first fund.
Yeah, it took me 3.5 years after I left my job to start raising the fund. I went through a couple of iterations, failed 2 times, all my money. So when we actually started Superhero, I had only debt. So it was quite the journey, going through years of trying, failing, and getting no's from investors, and questioning the whole thing a couple of times. It was quite tedious, but full of learnings as well, of course.
What kept you going so far and hearing so many no's? Because it's quite a journey as well.
I don't know. I don't know if I would do it again. No, honestly, if I had known how difficult it was, I'm not sure I would do it again, to be honest. But what kept me going, I really believed that there's a good business opportunity in funding early stage companies. I really strongly believe that. And I also fully believe that we will succeed. And I was enjoying it also at the same time. So I think it's a combination of that. But looking back, would I do it again? Maybe not.
But isn't that the saying, right? The younger you are, the more you should you should push harder and do more, fail more, try more difficult things than later on in life.
Yeah, I mean, you're right. It changes as you get older. I'm 45 today. When I left my job, I was 30, 31. So it's been a long journey.
Wow.
I do think of myself more like an entrepreneur than an investor, actually. I can definitely kind of sympathize with founders who raise funding and just keep on grinding and seeing all the no's, getting all the no's and then eventually maybe succeeding. So I definitely can understand how that feels like.
So in order to be resilient enough and to filter through all the no's to get your right yes, because I also heard some stats, if it's a very difficult product or it's a very visionary idea, you might be hearing 100 no's before your first yes. What is important to have in place for every founder to go through this hardship?
You need to like it, and I would encourage people not to kind of focus on the end goal, but the journey. You need to enjoy the journey and not just think about the end goal. Because if you don't enjoy the journey as such and you really believe in your idea, then it's better to do something else. So that would maybe be my 2 cents.
Enjoy the journey. It's a, it's a long way ahead. I am here with you, and I love to hear more and more people actually more embracing the here, the now, and this grind as we speak in a more even healthy manner. Jakob, one of the most important parts used to be, well, still is before the AI agents take over, our teammates, the team, the founding team. How was it for you, the whole navigation, and when did you get someone else on board after you started it?
So you mean when we started Superhero?
Mm-hmm.
Yeah. So I met Juha, my co-founder, 3.5 years before we started Superhero, and Juha had the same idea, same thoughts, and same experience. So Juha had actually been in the industry previously, so he had a lot of experience, not only from being an investor, but also from being actually running growth companies and raising funding. So Juha had a lot of experience that I didn't have, and also he had come to the conclusion that there needs to be more early stage funding in Finland. So I think that's kind of when I noticed that it's a good fit here now. We have a good founding team, and that's what we started to build everything on. So again, finding that right co-founder is super important. Be very honest about whether or not you feel that it's actually the right co-founder for you. Because I think when you're starting out, if it doesn't work out, you can acknowledge that and look for another co-founder. So be kind of super picky when you pick your co-founder.
Did you guys do some tests between you and Juha? How well you are performing as a team, or it was more like, okay, the visions aligned, let's start. And how was it for you when you got into a first more difficult conversation or situation?
When we then ultimately started Superhero, we had known each other for 3 years. So at that point, we've had time to, of course, talk a lot and go through many different things. So
Yeah.
we kind of grew into it, and there wasn't kind of this urgency necessarily to make a big yes or no decision, because we were still quite far from actually raising a fund. We knew that if we need to go and test our pitch with the market, and if it doesn't work, we just don't have anything. So we kind of did all of that at the same time, got to know each other, pitched other people, and then it kind of grew organically from there.
Okay, that's pretty cool. Okay, before we get into your investor hat, Superhero Capital name. How did that come into place?
After a long evening with 8 bottles of wine, I think.
I was expecting you to see after a long evening sauna session and some beers.
No, I think finding a good name for your company is very difficult and important. But the reasoning behind Superhero Capital is that we believe that entrepreneurs are superheroes. I mean, if you look around in your room where you are sitting, everything that you have there is there because someone founded a company and built a product. So the way we see it, founders or entrepreneurs, they build the world. It's the best way to make the world a better place. We feel that entrepreneurs are superheroes, and that's why we named the firm Superhero Capital.
Love it. All right, getting into your investor hat, Jakob. 4 funds, hundreds of pitches, thousands of decks, right? Conversations, conferences, meetings. How fast do you know it's a no? And what's the single and fastest red flag you can identify when it comes to founders?
So the way I think is we look at companies that fit kind of our focus in our geographical market is annually between 5 and 600, and we'll invest in 1.5% of them. So we'll do like 8 investments per year. I think that's quite normal for us. So kind of the default is always that we will not invest. If we meet the company, it's like 98.5% sure we're not going to invest. So that's kind of the default. Over the years, I've come to look less for red flags, but rather to look for like the few reasons or the one reason why we should invest. Because it's never, quite rarely, black, white, yes or no, and there's no clear formula. So I want to look for like the one thing that will get me excited, and that typically has to do with the team, because we invest very early, pre-revenue, pre-seed, so there's not much to look at. It's really about kind of understanding the founding team. And of course, the market opportunity. I mean, I think that the market opportunity, you can't really change that, but a good team can kind of change everything else. They're like a proxy for everything else. A strong team can build a good product and so on. So that's why that's what we look at.
Love it. I love looking at the positive and all the strengths rather than just identifying the weakness. So then flipping a bit the questions, what are those green flags in the team that you were like, okay, this team can really take it there and they can do it not on the local market, but I believe in them, they can do that globally.
Yeah, I mean, that's a good question. And when you're mentioning the green and the red, if we want to find a reason not to invest, there are always many of them. And that's why we look for the green ones. And if I, to summarize maybe, what do I want to see in a team? I would say that, first of all, can you convince people? Can you convince team members to join you? Can you convince customers to buy your product? Can you convince investors to invest in you? So it's kind of some kind of combination of your own conviction in what you are doing, your compelling vision, your charisma, clarity of thought. That's what I look for. And it's actually a good, I think, criteria, because when I meet a founder, they get to try that on me. So if they can convince me, then they probably did a decent job already. So that's the first thing. Can you convince people to join you on your journey? Well, secondly, as you know, venture capital is all about the large outcomes. So is there really an ambition to build something like truly meaningful and truly big? And it's not always easy to understand. Again, you want to talk with the founders, listen to what they say, listen to what they want to do, see what they have done before. Do they really have an ambition to build something big and not just something local? And it's nothing wrong with building something local, but that just doesn't really work for the VC business model. So that's the second thing I try to assess, the ambition. And then the third is the execution part. Can you get things done? Can you get them done fast? When you start, you're going to have competitors. So can you run faster than the other ones? Do you keep going when the going gets tough? Do you maybe know something that your competitors don't? So you have an edge in your execution. Maybe you have a background in the industry, so you can navigate quicker, these types of things. And that would be the third one. Can you get things done quickly?
That's a hard one to check.
It's a hard one to check. And again, it's always you don't have an opportunity to kind of follow teams before they raise their funding. But sometimes you get to know people over, maybe they're not looking for funding at the time. And then, when they do, you've had the opportunity to see kind of what they're doing, how have they succeeded, managed, what did they do, and kind of looking at the way they worked previously, because that's the best indicator of how things are going to go in the future. So it's kind of, very, not kind of hard, like yes or no, but trying to build the understanding about the resilience of the team.
How much does the gut feeling play here? Because we keep hearing now more and more that it's all about the gut feeling, what you feel. The way I explain gut feeling usually, like it's all about the pattern recognition. The more you see, the more you understand, and the more you can identify potential hypothesis of where that might lead. And I feel like that's what also causes for us part of the gut feeling, a bit also from the rational side. How is it for you?
Yeah, absolutely. I mean, all of these things, the sum of them is the gut feeling. You will feel that this is a good one. And because we invest so early, it's not that a company is going to succeed or fail, but you kind of get the feeling, and that happens maybe once or twice per year for me. You meet the team and you're like, from the first meeting, this is obviously one of the investments we're going to do this year. You're not sure it's going to work out, but you know this is definitely kind of one of the bets, if you will, we're going to take. And there you trust your gut.
Do you think that was the feeling you got with the lead feeder, who you backed at the seed stage, and then it grew like 10 times, right? And then they had a merger, and it was quite a successful deal from my point of view.
Yeah, I mean, I do remember the first meeting. It was in a sauna.
No way.
Cold sauna, but nonetheless. No, I mean, it was one of those opportunities where, again, in the first meeting, they were kind of ticking all the boxes. They had done it before. They knew what they were, supposed to do. And there was some traction. So there was a, need on the market for the product. So definitely, yes. I mean, I do remember that, coming out of that sauna, like, okay, this is clearly one of the deals we want to do. And let's hope they will have us on the cap table.
By the book, basically.
Yeah.
The deal by the book. So what do you think makes founders decide to have you on the cap table? What's so different about Superhero?
Yeah, it's a good question. We actually did a survey on that once.
Here we go.
Yeah, we listed, I think we had like 10 reasons or 10 criteria where we asked founders in a survey that why did they choose us. The number one reason, I think they could pick like 3 out of the 10 or something like that. So anyway, the number one reason was chemistry. So personal chemistry. They felt that they felt good about us. And then the second was speed of decision making. So we were quite quick in telling them that we believe in them. And I think that's been something that's worked to our benefit. And I think the third was decent terms. And the fourth was nobody else offered.
Holy moly.
So maybe that answers your question, straight from the horse's mouth.
Well, also what I've learned that Superhero describes itself, right, as Alfred to Batman. And what I found very unique about the fund that you guys are more taking the back seat or behind the scenes and allow the founders to own the narrative with obviously some kind of regular accountabilities that has to be done, but you don't come and you don't interfere fully or flip aside what they've been building. What kind of experiences or approach towards the fund creation made you to bring such values and decision making? Because there are different funds, right? Some of them are hands-on, some of them are operating more like venture studios or have more decision power and so on.
Yeah, I mean it goes back to the name creating session, So the other element of superhero capitalist is that it's the superheroes that do the work, but they have a supporting team. Like Batman has Alfred, who stays in the Batcave and makes sure that you have fuel and the car is repaired. And our thinking was, why would we invest in people who kind of need our help? We want to invest in founders who know what they do, who can do it, and don't necessarily need our help, but may want it when it matters. That's why we believe that we should stay out of the founder's way, but we should be there when it matters. So then the question is, okay, when does it matter? That's partly up to the entrepreneur. When do you have a situation that you need help with? And then, of course, there are situations where we might be very equipped to help them in terms of pitching, Series A investors, etc. So, but that was the whole idea. We feel that the domain expertise and the decisions should come from the entrepreneurs. And our decision to invest is not just about money, it's about believing. So we invest in entrepreneurs we believe in. And if we go and, try to change what they do, then it's a kind of a conflict between what we do and the reason why we invested.
So early stage, the company seems quite covered right now in Europe, but we keep seeing the gap when it comes to bigger tickets and the mature companies. And we clearly have an IP here on the ground in our countries, But then when they need to scale, they need capital now, here, and fast. Usually they go to the US or somewhere else. What would be your take on the current gap? Also, 2 weeks ago, we had the new EU Inc. 28 regime launched, right, to kind of help. So I'm curious to hear your take on you. Do you think it's going to help? Or what can we do here and now to actually succeed rather than lose the companies?
Yeah, no, I think we need more. There's definitely a gap. I think the early stage scene looks quite good, but when companies need to raise tens of millions, there's fewer options in Europe, than maybe in the US, and that increases when you go further up the funding scale. I think it would be, great that funds and institution could allocate a significantly larger part of capital to growth companies. Currently, it's a very, very small part of their assets that are allocated into high growth ventures, and I think that could definitely be increased. So we definitely have the means to do it. We need to be more determined. We need to be more serious about it. I'm hoping that all the initiatives that are now being developed, EIF launched a new program as well just a couple of days ago to invest in 100 large funds. So there's a lot being done, and I hope that we can get also the private capital, because at the end of the day, that's where the push needs to be, so that we could have an ecosystem in Europe where we don't need to rely so much on public funding as we currently do.
Why do you think the private capital is still so resistant for funding the startups?
I think it's probably many parts. One is regulation. That you need to be very careful with pension funds, which might put restrictions on how much capital can be put in high-risk investments. And I think it's also kind of a realization that probably is not as prevalent as it should be, that many of the large growth companies we have, in our region are actually, quite big companies, bigger than many listed companies, and growing faster. And also, if you look at, the economics of venture investing, you typically have like benefits that you don't have in the public markets, like, for example, liquidation preferences. I think there needs to be a realization and acknowledgement that actually the investments in growth companies are not as risky as they are being perceived.
Then Jakob, I was thinking and hearing now you sharing, we really have lots of great companies in the Nordics, in the Baltics, the whole European region. What made you to come to the Baltics?
Yeah. So we started out with the first fund, and that was very much focused on Finland, and we had a very low allocation to do investments outside of Finland, so we were staying quite put for the first years or so. But through different activities we were engaged in before we started Superhero accelerators and such, we had a network in the Baltics, so we knew people there, and we saw that there's a lot of similarities with what we were seeing in Finland, kind of a highly technical talent pool, good skill, kind of this global mindset, because you have a small domestic market, so you can't rely on that, so you have to go abroad immediately. And we also saw that there was not so much funding available in the Baltics. So we again saw it as a promising business opportunity, maybe in contrast to look at Sweden, for example, which more mature, a lot of funding, larger funds. So we were kind of looking at that side by side and think definitely we see a better opportunity in the Baltics, which also had quite a bit of success stories. So there was proof that actually large and valuable companies can be founded in the Baltic region. That was basically the reason why we decided to go ahead and focus on the Baltic.
Amazing. Now let's say for LPs listening to our conversation right now, because founders, I think they've got their point of view, what's the Superhero is about. Now for LPs. So why, for example, they should invest in Superhero capital, or why they should keep an eye on the fund activities?
I think one thing that we are doing that many other investors are not doing, we really believe that it's important to have like a local presence in the areas that we engage in, which is why we have a quite strict, geographical focus. We want to work only in the countries where we have, people on the ground. And I think that gives us access to opportunities before other funds that might not have that. So that's been a kind of a key cornerstone for us, because I think a lot of venture capital is about kind of having access, seeing the opportunities at the very early stage. So I think that's one area that definitely is important. And also this whole region is kind of, it's still growing. I'm sure we're going to have a lot of new companies that grow to 100 millions in revenue. And this is still a very good time to invest in this market. I think, there are quite a few reasons to be encouraged. And, we've been around for a while. We know what we're doing, and we've had some success with that. So I think we're going to do even better in the future.
You have quite some good track record. And talking about the fund and the current landscape, everyone has to have some kind of AI moat or focus or thesis. So what's your take on this current landscape and boom on that?
Yeah, on AI, I mean, it's a big question. Maybe,
It is.
when I think about AI, so maybe a couple of things. For me, it's a lot about productivity. I think that is kind of the big thing. At the same time, I do think of AI in much in the same way as I thought about the internet 25 years ago. It's going to make things much more efficient, and AI will be a part of everyday infrastructure. And as a term, it will kind of become meaningless in a sense. No one would say today that we are an internet-driven company. In the future, no one's going to say we're an AI-driven company. The tools are out there. The models are out there. So I don't think that leveraging AI, it's not really a competitive advantage anymore for founders, because everybody can do it. I think there's a lot of noise, and for us to kind of understand what actually the added value is, and going back to the fundamentals, what's the problem you are solving and how do you solve it? And if you use AI to solve it, great. Everybody else can do that as well. So the question is, what's your true moat? I think it's more going to be like, maybe you have access to some proprietary data set, which you can use your models on, and that will actually be the moat in that case. So I'm trying to look through the AI labels quite a lot. I was actually, yesterday I met with the founder, and the pitch deck didn't mention AI one single time, and it was super refreshing. I was really happy, and we talked about that a bit, and he said to me that at the end of the day, we've discovered a really problem which our ICP has a huge problem with, and they can't solve it, but we can do it for them. So then, you use your tools, you use AI to deliver that product, but it's kind of a side note, because it's a default. Everybody needs to be able to do that today. So that's my take on AI. I'm super excited about the productivity gains, because it will give us all a lot more time.
I love the latest Claude update. It's just, wow, the capabilities are just simply insane. And I'm not promoting that. There are different also tools that can do that, but the latest release of theirs was just like game changer when it comes to creating your own apps and so on. Talking about innovation, investments, you celebrated 10 years with the fund a year ago. Now we're counting into the 11 years. What have you learned over such period of time, running different funds, investing into people, having LPs to come back and to trust you again and again and again? So why do you think LPs still trust you and come back to you to invest in further funds? And what are your major learnings over the years that you think gives you a huge moat?
Many questions, but
You
why?
choose which direction you want to take.
What have I learned, and why do I think people keep coming back? If I look at us, I feel we've stayed quite true to the fundamentals. It was always about the entrepreneur, and then kind of less about the technology, more about the entrepreneur. And we've seen kind of, trends and hypes come and go, not just AI, crypto, all of that you have this kind of wavy movements, and, they come and go and intensify, and maybe, some even die out. So at the end of the day, you want to look what's really at the foundation, below all of that. And again, I think it's the drive of people to want to solve problems and then just take the risk to do that and start building them. And I think that kind of entrepreneurial drive is alive and kicking more than ever before. And irrespective of what trends, new technologies we will see emerging in the future years, that will be the engine that kind of drives it all. And that's been kind of our narrative as well. It's all about the people, and we don't, as such, we try not to get too excited about the technologies. The trends are what drive efficiency, in the products and the customers. But at the end of the day, the engine is the people below that.
So I have this closing tradition in the podcast to leave the listeners to a thought to ponder. What would be your final thought to ponder that we can continue through the day and think about?
Yeah. Well, for me, it probably comes down to, okay, what would be the single thing that will help you succeed if you want to be a founder? What do you need to have? And then I would go back to what I talked about, what we look for. When you have identified a big problem, can you actually convince people and can you get things done? These are the big questions, I think, that in the case of a specific team, think about that and take a look in the mirror.
Very nice. And talking about the team, final question. Have you ever watched together with the superhero team, the Batman, after you launched the fund 11 years ago?
No, that's a good idea. We should.
Right, so yeah, I will leave it then. I think the next team gathering will be Batman screening in the cinema.
Sounds good. Yeah, I feel like I'm up for a good movie.
Amazing. Good. So we keep it on the to-do list. And then everyone, thank you so much for joining. Today we had Jakob from Superhero Capital, our founding partner. And I hope you learned a thing or two about the fund. Enjoy the day wherever you are and see you next week. Yay. Thank you,
Thanks so
Jakob.
much. Thanks, Zivile.